Today's topic is bonus depreciation and expensing. I'm Leandra Letterman.
I'm Orly Mazur, and I'm a tax professor at SMU Dedman School of Law. And it's time to break into tax.
This is the second video in a two-part series.
In our depreciation video, we provided an overview of depreciation deductions. Today, we're going to look at Section 179 and Section 168K, two provisions that allow taxpayers to recover the cost of their property even faster.
So as a review, to take depreciation deductions, the taxpayer has to have depreciable property. Taxpayer uses the gain basis in that property. Salvage value is treated as zero, so the taxpayer can recover the entire basis through depreciation, and the taxpayer reduces the basis as depreciation deductions are allowed or allowable.
However, certain taxpayers may benefit from additional depreciation deductions that allow them to recover the cost of their assets even faster. So in calculating depreciation deductions for the first year the property is placed in service, you need to check for, first, whether Section 179 applies. That provision provides for an immediate deduction for certain business property acquired by smaller businesses. You then want to also check if Section 168K applies, which provides for a bonus depreciation deduction for qualified depreciable property.
So in this video, we're going to look more closely at how sections 179 and 168K work. Let's start by looking at Code Section 179.
Section 179 is an election to expense certain depreciable business assets. So you can see here that this is an elective provision. This means that the taxpayer must elect on his or her tax return to take advantage of this provision. Now, if a taxpayer elects to apply Section 179, then the cost of any Section 179 property will be treated as an expense, which is not chargeable to capital account. Any cost so treated shall be allowed as a deduction for the taxable year in which the Section 179 property is placed into service.
An expense that's not chargeable to capital account means that it's a current deduction. Chargeable to capital account means that it's capitalized, which is creating or adding basis. And we briefly discussed this in our break into tax video, initial basis in an asset. So in general, this is a pro-taxpayer provision. That's because generally taxpayers would prefer to take a deduction up front for the full cost of an asset rather than creating basis in the asset and then looking for depreciable property, the depreciation deduction to just recover that cost more slowly through deductions over the course of the useful life of the property.
Let's see what property qualifies for Section 179 expensing. Not all property can qualify for the Section 179 deduction. Only property that is Section 179 property can qualify. That property is defined in Section 179D of the Code. There are 4 requirements that must be met for property to qualify for this deduction. First, the property must be tangible property or computer software. So it must be property that you can move or touch or computer software. The second requirement is that the property must be Section 1245 property, or at the election of the taxpayer, qualified real property. So Section 1245 property essentially means property that's depreciable personal property. And with respect to qualified real property, it's a pretty narrow definition, so most real property won't qualify for the Section 179 deduction. The third requirement is that the property must be acquired by purchase. So you can't get a deduction for property that you acquire by gifts or inheritance or property acquired from related persons. The reason for this is because Section 179 was intended to stimulate the economy, and you help stimulate the economy by making purchases. And finally, the fourth requirement is that the property must be for use in an active trader business. If the property meets all 4 requirements, then it is Section 179 property and can qualify for the Section 179 deduction, subject to additional limitations.
Let's look at what those limitations are.
So first, there are dollar limitations. In other words, Section 179 limits how much you can immediately deduct. The current dollar limitation is $1 million, but this is adjusted for inflation. So in reality, the limitation is a little higher. So second, there's a reduction in limitation. Because this provision is intended to benefit small businesses, a business that puts too much property into service in a given year won't qualify for the entire deduction. Section 179B2 says that if property placed in service during the taxable year exceeds a certain amount, the maximum deduction is reduced dollar for dollar. Currently, the property cost limitation is $2.5 million adjusted for inflation. Another limitation is a limitation based on income from trade or business. This is in section 179B3, and this provision limits the amount of the deduction to less than or equal to the taxable income in any of the taxpayer's trades or businesses during the year. So if the taxpayer doesn't have any income from any trade or businesses that year, no section 179 deduction can be taken that year.
Let's now turn to an example of the dollar limitation and the reduction in the dollar limitation. Don't forget about the fact that if the taxpayer has insufficient income from trades or businesses, that functions as another limitation, but we're not going to illustrate that here. We're going to assume that the taxpayer has ample trade or business income. So in this example, we'll use the numbers that are in Code Section 179, which were valid for the 2018 tax year. And just note that these numbers have been adjusted for inflation, and so they are higher in subsequent years. So imagine that the taxpayer places in service $2.6 million worth of Section 179 property in year one. Well, $2.6 million exceeds the $2.5 million threshold by $100,000. So what that means is that $100,000 is subtracted dollar for dollar from the $1 million limitation, meaning that the taxpayer Section 179 deduction would only be $900,000 rather than $1 million as it otherwise appears in the statute for tax year 2018.
Don't forget, this is a form of cost recovery. So what does this mean for the taxpayer's basis in the asset?
This means that the taxpayer has to reduce the basis in the asset for the amount of the Section 179 deduction taken. And you see that in the regulations under Section 179, in particular, Treasury Reg Section 1.179-1F1. So that's Section 179. After running through it, determining how much the taxpayer's 179 deduction could be and whether the taxpayer is going to elect to take the 179 deduction, then any basis that's left over in depreciable property can be depreciated under Section 167 and Section 168. And Section 168 currently includes subsection K, which is bonus depreciation. So that's the place to look next.
Section 168K tells us that in the case of any qualified property, the depreciation deduction provided by Section 167A for the taxable year in which the property is placed in service shall include an allowance equal to the applicable percentage of the adjusted basis of the qualified property, and the adjusted basis of the qualified property shall be reduced by the amount of such deduction before computing the amount otherwise allowable as a depreciation deduction under this chapter for such taxable year and any subsequent taxable year.
So notice that Section 168K bonus depreciation only applies for the taxable year in which the taxpayer places the property in service. Notice also that applying Section 168K rests on the property being so-called qualified property. When you see the word qualified, you should be looking for a definition because that means qualifying property. It has to be property to which Section 168 applies that has a recovery period of 20 years or less, or is computer software or water utility property or various other things. In addition, it has to be property that the original use of it begins with the taxpayer or the taxpayer meets certain requirements with respect to the acquisition, and which is placed in service by the taxpayer before January 1, 2027. There are some exceptions to that right below, but you can see that Section 168K is a temporary provision that is slated to expire if Congress doesn't make changes to the code in the interim.
What's significant about the recovery period being 20 years or less is that this essentially means that most real property, things like buildings, are not going to be eligible for the bonus depreciation deduction because they have a recovery period of longer than 20 years. If the taxpayer qualifies for the bonus depreciation deduction, then the amount of the deduction in the first year the property is placed in service is equal to the property's basis times the applicable percentage. But what is the applicable percentage? Section 168K6 defines this term for us. For property placed in service after September 27, 2017, and before January 1st, 2023, the applicable percentage is 100%. This means that if you qualify for Section 168K bonus depreciation, you can deduct 100% of the property's basis in that first year the property is placed in service. In other words, you get to immediately expense the entire cost of the property. Note that the salvage value here is also irrelevant for determining the amount of the deduction. However, after 2022, the amount of the bonus depreciation deduction gets phased out. So in 2023, the applicable percentage is only 80% of the basis of the property. In 2024, the applicable percentage is 60% of the basis. In 2025, it is 40% of the basis. In 2026, it is 20%. And then after 2026, this gets completely phased out.
So notice also that the default rule is that Section 168K applies. However, Section 168K7 provides for an election out of Section 168K.
If a taxpayer makes an election under Section 168K7 with respect to any class of property for any taxable year, then the bonus depreciation deduction will not apply to any qualified property in the class placed in service during that year.
Here's an example of how Section 168K works. Let's assume that the taxpayer buys property for $200,000, and that's the basis for depreciation, and the property qualifies under Section 168K. Let's also assume it's tax year 2025. In 2025, the bonus depreciation percentage is scheduled to be 40%. So the taxpayer would apply that applicable percentage of 40% and would be able to deduct 40% of the $200,000 basis, or $80,000, under Section 168K. And under Section 168K1, that reduces the taxpayer's basis in the property, so from $200,000 to $120,000. The remaining adjusted basis in the property can then be used to generate regular depreciation deductions under Section 167 and Section 168.
Watch our video on depreciation deductions to see how you would calculate depreciation deductions for that remaining basis of $120,000. This has been Bonus Depreciation and Expensing. Thank you for joining us as we break into tax.
Don't forget to like this video, share it with your friends, subscribe to the Break Into Tax YouTube channel, and turn on notifications so you don't miss a single new video when it drops.